Good morning. How many of you have been to every one of our Taxpayer Tuesdays? Yay, y'all get a perfect attendance. So today we're going to give you some insight into our world on a day-to-day basis. So there's a lot of compliance that we deal with annually, daily, almost daily. We have a deadline, and so I don't know that a lot of people understand what it takes to run a school district on the financial side, so we're going to talk about that. So our objectives are looking into the annual cycle of all of the tasks that we are faced with, explain the process for preparing an annual budget. It is quite a lengthy process, and then look at some of the financial compliance requirements that all school districts face. Before that, one of my favorite questions is, what do you do for work? And if I say I work for a school district, then people automatically ask, are you a teacher? No, I'm not worthy of teaching. And then I say, well, I'm like a CFO, and they don't know what that means. So if I say deputy superintendent, they really don't know what that means. They might think I have a badge, which I don't. So I just kind of wanted to give an overview of what my world looks like. So these are all of the areas that I oversee. But then within these, I have directors. So we have Clint, he's back there. He oversees facilities and construction, but I support him in that role. Transportation, we have Pam Swanks, that is the director of that. I oversee her and provide assistance there. Child nutrition, we have John Crowley, so support him. And then everything else here is under the finance realm and business services. And we just hired a new CFO. So Gina Mitski is our new CFO, and she will get to participate in this series, whatever it looks like next year. But this has been my world for 30 years, mainly on the finance side. So debt management, managing our outstanding bonds and all the compliance that goes along with that. And then helping prepare for bond elections and then the sale of those bonds when they are approved. Budgeting is a big aspect of our role. It's almost year-long, not only just putting a budget together and getting it approved by the board, but also monitoring that throughout the year and making sure that things are within budget. You're going to see that the largest part of our budget is payroll, and so that's the big part of the job, and then the accounting. So fun fact, when I was studying accounting in college, governmental accounting was taught by one of the GASB members, and it was open book tests, and I thought, I'm going to do governmental accounting. I almost failed every class because I thought I was never going to use that, and lo and behold, now governmental accounting is my life. We just talked about fundraising, so managing those fundraisers and the funds that come from them. My favorite one on here is PEAMS. This is really a four-letter word with an S. This is the system that all school districts use to submit data about everything. Every student, every teacher, how many years of experience that teacher has, how old the teacher is, where they teach down. I've got a system where I can go down and see who the third grade teacher in Abilene is. All of that is submitted through PEAMS, as well as all of our financial data and our budget. And so keeping up with PEAMS is a really big job. Investments, so the district has a $100 million budget. We invest those dollars so that we earn additional revenue. Risk management, think about all of our insurance for all of our properties, our buses, our personal liability. And then grant management. With COVID, the federal government gave us lots of ESSER dollars or additional federal dollars. Those grants come with lots of strings attached. And so these are the things that I do in a day-to-day job that is really hard to explain to somebody what you do. So with that, we're going to talk about our cycle. So school districts can have two different fiscal years. You can have a fiscal year that begins on July 1, or you can have a fiscal year that starts September 1. Historically, everyone was a September 1 start, and then several years ago, the state said, well, we're going to let you have a July 1 start date, because at that time, our federal grants started July 1. And so there was a mismatch in fiscal years. And so wouldn't you know, when we switched to July 1, they changed the cycle for federal grants, so they still don't align. The reason I like a July 1 is when principals come back and are getting ready for the start of the new school year, they have access to their budgets. So Kristen, you were probably a principal that had to wait until September 1 to order school supplies. It was super frustrating, right? Dr. Kidd, wherever she went, you probably lived that. So that is the reason I like July 1. July 1 also comes with lots of estimates because we don't know our property values. We may not know what this legislation has brought, but the big reason to go to a July 1 is for the campuses. So as of July 1, we have to have our budget approved by the 19th, and that's so that we can meet the publication laws, and then the board has to adopt that by June 30. 150 days after that fiscal year end, our audit is due to TEA, and then throughout the year, we have a lot of state and federal reporting requirements. So I think you have a handout of this. This gives you kind of an overview of what happens throughout the year. This is by no means everything, but some of the highlights. So again, July 1 is the start of our fiscal year, but you'll notice the first bar on there is close out the fiscal year. So starting July 1, we get to work on closing out the year that just ended and spend all summer doing that. The other big highlight in July and August is getting campuses ready for the start of the new school year. In July, we receive our certified property values. So we're not receiving those until July. I've adopted my budget in June. So that budget adoption is going to be based on all of these projections that you see happening the rest of the year. September is when we close out everything, the auditors are here, and the audit is final. And then we try to take that to the board in October for presentation. It might be November in some years, but it has to be done to meet that November 27th deadline. Our first big PEAMS deadline is the last Friday in October. That's when all school districts take a snapshot of the students that they have enrolled at that point in time, and that becomes your official enrollment. What happens to student enrollment throughout the year? It drops off. It changes, right? It ebbs and flows, but that October snapshot is what becomes our official enrollment, even though that's not what our students are for the rest of the year. October is also when the tax office sets the levy. So again, I've already adopted a tax rate back in August or September, submitted that to the tax office, and whatever the values are at that point, that becomes our levy. And then this is when we submit to the state through PEAMS what our adopted budget was, or what it is at that point, and our staff numbers. And so there's a lot, as I said, that goes into those staff numbers, making sure that what is reflected for our staff is accurate. Then in November, like I said, submit the audit to TEA. And then this is where we start making a lot of projections through our crystal ball. So think about November, I'm starting the budget process for the next school year. So school just started, but now I'm projecting what my local property values are going to be, what my tax collection rate is going to be, what my state values. So I also have to project what the state says our values are, and I will get those the next year for the prior year. So it's a full year off. Project what our other revenues are going to be, kind of try to guess how many new positions campuses and departments are going to ask for, so that's new FTEs. Project other costs, and then develop campus allocations, and we're going to talk about those a little deeper. Then in January, we take all of these projections to the board and say this is our best estimate of what is going to happen to shape this budget, and we want the board to be on the same page at that point. I've lived it when you say in January you're going to give staff 2% raises, and then in late April or May, the board says, well, we want 5%, we want 7% raises. we've already been preparing the budget, and so that's a big, big lift. And so in January, we want the board and the administration to all be on the same page of what we're gonna build the budget with. That's when we receive our state values, our state property values for the prior year. And then this is when we submit through PEMS our audited numbers. So now the state has our audit, and then this is when we distribute worksheets, budget worksheets to campuses and departments. So in January, all the campuses get their allocation, departments get their budget worksheets, and they get to work on that. A big thing in February, and I skipped in August, is our debt payments are due. So every August and every February, our debt payments are due. That's the one thing that causes me the most nerves or lack of sleep, because that's one thing I can't fix if we don't make it. And so we have to make sure we get those paid. Then right before spring break, we ask campuses and departments to turn in their budgets so that we can start working on compiling everything. In April is when the appraisal district gives us their estimate of what property values are going to be. So remember, they didn't certify those until July, but in April they give us an estimate. Back in November, I was estimating what the appraisal district was gonna tell me, and so we see how far we're off. And then May, the board approves the compensation plan, meaning what are we going to pay employees, what are the raises going to be, how many new positions. We finalize the budget, and then in odd number years, so this year, it's a legislative session. And so right now, I will tell you, we really have no idea what our funding is going to be, and House Bill 100 that's getting all of the attention is in a stalemate as far as property tax relief, because the House has one version, the Senate has another version, and at the very bottom of my update yesterday, it said special session. So if they don't come to an agreement, I'm not gonna know what our tax rate is going to be potentially till June. May and June is when we update our procedure. So every year something new comes along, we're like, well, we need a procedure for that, or we need to amend this procedure. So we update those so that we can train campuses when they come back in July. And then the big lift in June is amending the budget for the year that we're in, that is about to end, and adopting the budget for the new school year. And then our final PEM submission, so this is my final student numbers. So this June, we'll be submitting to the state what our attendance and enrollment was for this entire year. Remember, we were projecting what this year looked like November of '21. So all of this to say there's a lot of estimates that go into a budget. And so I've, in my career, gotten a lot of pushback of, well, you adopted a budget of this, and then it ended up here. Well, that's because there are so many estimates that have gone into preparing that budget. So let's switch gears and talk about the actual process. So in Dripping Springs, we have a local board policy, CE, that really guides the board in how to adopt the budget and what their target is. And so I like to equate this as our roadmap. If you don't know what your guardrails are or what you're trying to achieve, then you can get to a board and one wants a balanced budget, another board member might want a surplus, and yet another one is okay with a deficit. So this board policy really is our roadmap to how to get where we're going. The first part of it says if we're going to have a budget deficit, then it cannot be more than 2% of what we project revenues to be. Is this a state law? Absolutely not. This is Elaine Budgeting 101. And where this came from, many, many years ago, my first CFO role, our superintendent was worried because we had deficit budgets. And so he created this team called ASD, Achieving Zero Deficit Initiative. And our goal was to get the budget where it was balanced and we did not have deficits. So we had big committees, we met, and it came down to we were going to close down the alternative education program in order to get a balanced budget. And so I stood back and I went, wait. So I went back and analyzed years of data, and even though there had been a deficit budget, they ended in a surplus. And so I went to that superintendent and I said, okay, if I cut this program, then you understand that it's very likely that we're gonna have a surplus at the end of the year. So what did we accomplish? We cut student services just to add to fund balance when our fund balance was healthy. And he said, yeah, you're right. And so I went and I looked, and it was really between a 2 and a 5% variance. And so at that district, we adopted this, okay, we're gonna have a deficit, but we're gonna cut our losses so that if we really do have a deficit, we're not hitting fund balance for more than we need to. Lo and behold, when I came to Dripping Springs, they understood the concept, they adopted it. I've used this in a total of 4 districts, and it's been a really good way to guide the board in making budget decisions without having to cut programs and then adding to fund balance. So I love it. I know a lot of my colleagues hate deficit budgets, but if you turn them around and they're not a deficit, they're not the end of the world. The other big thing in Dripping Springs is we require that our fund balance has to exceed 4 months of operating expenditures. This is just a good policy to have. This is saying, okay, I want to have 6 months of living expenses in my bank. And so there was a lot of discussion about what is appropriate there. Many, many years ago, TEA said school districts need 6 months of operating expenditures in fund balance. And then funding cuts happened and deficits were happening, and so the state realized, okay, that's not sustainable. So the Governmental Finance Officers Association has some guidance on what a healthy fund balance is, but at the end of the day, their policy says it really depends on your government and your situation. And so 4 months is a good number for us. That just says that we're gonna have a fund balance that will help us if we get in a jam. So really everything starts with budgeting. Our finances are all dependent on what the budget looks like. So again, that starts by estimating our student enrollment. And why is that? Everything's about the number of students we serve, right? How many teachers are we going to need? Our funding is based on how many students, so we have to start with our student enrollment. The way that we do that is we hire a demographer, and the demographer goes out and talks to all landowners, all developers, to try to get a picture of what will future growth look like for the district. We take those numbers and then we compare them to what students we actually have. So in this district, we have a demographer update every other year. My prior district, they updated it every year. But then we have to take the demographer's numbers a step closer and actually estimate by campus how many kids in each grade level. So the demographer will say you're gonna have 4,000 elementary students, but they don't tell us where they're going to be located within our district. So we have a tool where we break that down and say, okay, at this campus, you're going to have 6 third grade classes that hold 300 kids, so that we know how many staff we need to hire to serve the student enrollment. That drives the estimate of revenues. So if you attended in January, we talked about our revenues are determined by the number of students that went in the jar and the type of students. So revenues are dependent on the student enrollment, and then that drives the campus allotments, and we're going to look at what those look like. And then, as I mentioned, the board approves all of these estimates or assumptions in January, and we distribute the budget worksheets. What I want to touch on here is our departments. So our campuses are given a dollar amount per student, and I say, campus principal, here's your allotment, you tell me where you want to spend it. Departments are different. Departments are serving all students in one way or another, right? And so for departments, we use what I call a quasi-zero-based budgeting system, and that technology is going to be paying for the same licenses year after year, right? We know we're going to have internet service, we know we're going to have Microsoft programs, Google subscriptions. So it doesn't make a lot of sense for me to just give technology a blank piece of paper and say, come up with your budget. So they really start with what they've been spending, and then they adjust it for increases in service fees, increases in staff, or whatever they have, and then anything that's above what they had the prior year, they have to justify. So it's not just tell me what you want and you get it, you have to justify what those additional costs are. And then, once we compile all that, if I've got way more expenses than I've got estimated revenues, then I go back to those departments and say, okay, you've got to cut, what are we gonna focus on? And we start cutting so that we can meet our revenue number. So like I said, in estimating revenues, there are so many estimates. We need our student enrollment, and right now we're still based on attendance. So attendance used to be pretty consistent. Since COVID, attendance is all over the place. I know a lot of CFOs that are complaining their attendance is at 90 or even below. And what's happened? Parents are working from home and figured out, oh, well, if my kid has the sniffles, it's okay for me to keep them home. I don't have to send them to school. And so attendance has really started becoming an issue. And because that's how we're funded, it's an even bigger issue. And then what kind of students? Am I gonna have more bilingual students? Am I gonna have more GT students? What programs are my students going to be in? And then the fun one to estimate is local property values. So again, in November, I'm trying to project what property values are going to do. Before 2018, it was pretty easy. It was like, oh, well, we're seeing 8 to 10% increases, so we'll budget 8 to 10. Then COVID happened. No one thought property values were going to increase by 20, 30%. And so now it is back to, is it going to be 19%? Is it going to go back to 10%? Is it going to be a loss? So not only am I trying to estimate what property values are going to do, are people going to pay their taxes the way they have been? What's that percentage of collections going to be? And then for this year in particular, what's the tax rate going to be? I have no idea what our tax rate is going to be next year. And then, like I said, estimating what the state says our property values should be, because the state values are what drive our recapture and our state aid. So the state comes in and does their own study. It doesn't matter what the local values are, what we're collecting taxes on, the state is going to say, this is what we think you're collecting taxes on, and this is how you're going to pay recapture. And then all the other local revenues, so any participation fees, rental income, interest income, so estimating what will interest rates be on our investments. So you can see in estimating revenues, there are a lot of guesses. So going back to campus allocations, so I talked about this, all campuses are given a per student amount. So for regular instruction, elementary is allocated $115 per student. That's in enrollment, not attendance. Middle school, $127, and then high school, $126 and $127. Secondary gets more because they have more programs. They have more fine arts, extracurricular things. And then we have these special program allocations. So every campus has students that are in special programs. That might be special ed, it might be gifted and talented. At the high school, it will be career and technology programs, pre-K, dyslexia. So we also give campuses extra money for those kids on their campus, and those are estimates based on the prior year. And then what we do is this regular instruction budget is at 95% of what we think their enrollment will be. And then after the first 6 weeks of the new school year, we look to see what their actual enrollment is based compared to what we estimated their enrollment would be, and we settle up. So if at 95% of your enrollment, you have more enrollment, you get additional dollars, and if you have less enrollment, you get some money taken away. 95% of our campuses get additional money after this settle up. And then it's important to understand that if we're going to make cuts at the campus level, we have to come back to this allocation and distribute that equally. So I can't just say, Dripping Springs Elementary, I need you to cut $10,000, because then that makes the other elementaries unequitable in their funding. So when we make cuts, we try to do it outside of the campus area because of that equity. And fun fact here, several districts I've gone into, and my very first role as CFO, I was looking and the campus was getting the same amount every year, no matter how many students they had. And it was a fast growth district. So I was like, well, this doesn't make any sense. They're not getting money for new students. And if they were losing students, they were getting the same. And so developing these allocations is tricky in making sure that all campuses get what they need and it's equitable. And in our statewide chat group in the fall, there's always 100 posts. What are your campus allocations and how do you do it? And I always warn people, you have to be very careful because in that allocation amount, does that cover copiers? Does that cover counselors? Does that cover PE? Because you might have allocations outside of that. And so it's not an apples to apples comparison. So I dare you, but you won't be able to figure it out. Go ask Wimberley or Hayes or Austin, what is your per pupil allocation? It's definitely going to be different than this. But you also need to understand what is covered under that.
Right.
And so,
that 115, is that per day, per week, per month?
for the year, per student. Per student.
$115
Per student.
for educating the entire year.
Doesn't include payroll, so that's the campus supplies, basically.
Okay.
So remember this special programs right here? These are required. So certain student populations generate additional funding from the state, but those dollars have to be spent on those populations. So we get additional state funding, and I use that word lightly because we're all funded on property taxes. But the state still says we get state funding for these special populations, and it has to be spent on those populations. So I can't generate a bunch of money on my special ed population and then go spend it on fine arts or something else. It has to target those special populations. And then for special education, there's this thing called maintenance of effort. So if I spend $10 million this year, unless there are extenuating circumstances next year, I have to spend $10 million. I can't spend $9 million, or that's a finding from the state. We potentially have to send those dollars back. So we have to be very careful in what we add to special ed, because now that's a locked-in cost. You can't reduce it unless you have a big change in your student population. So what I wanted to demonstrate here is based on our current revenue estimates, and again, this is all considered state aid, but we know in Dripping Springs, our local property taxes fund all of this, but the state still tells us how to spend it. So the spend requirement is the first column there. So my dyslexia earnings have to spend 100% of what the state says I'm going to earn on dyslexia. Well, when do I know my dyslexia students for the year? In June, after the school year ends, but I have to make sure I've spent what I would have earned on that student population for that year. Early education allotment, 100%, gifted and talented, 100%, and then all the others are 55%. So most of these, you can't include your payroll cost, except bilingual. You cannot count your bilingual teachers towards that spend requirement. So the point of this is based on our estimated revenues right now, I have $14.7 million that I have to spend in these areas. There's no flexibility there. So when people say, well, cut your budget, you're going to see there's not a lot of areas that you can really do that because you have to meet these spend requirements or you send money back to the state. And so for these programs right now, we have over 19 million budgeted for the 14 million. So I'm not concerned about that, but I know I have to keep those dollars in those buckets. All right, so let's break down our budget. Let's see where the money goes. So you're gonna have to step back and take a little bit of an accounting coding class for you to understand this. So we have a account code string that I believe is 26 digits long, and each segment of that account code means something. This is prescribed by the state, we have to use it. And so one section of that is what is called a function. And this is the general area that the costs are spent in. So some of those, so we have a function code for the classroom, we have a function code for library, for nurses, you're gonna see all of those. That is the level that the board approves the budget. So they say, I'm approving X amount of dollars to be used in the classroom, X amount for the nurses area, for counseling, etc. Then another segment of the account code is called the object. And this really tells me what kind of expenses. Is it payroll? Is it supplies? Is it a contract service? So again, the board approves it by the function, not the object. So here are all of our functions. So as you can see here, I can tell you exactly how much is budgeted for and spent by transportation, by food service, for community services, for data processing. And remember, this is a consistent system across the state. And so it's very important that all school districts are consistent in how they classify their codes, because otherwise, if I'm coding library staff to counseling, when I compare my expenses to another district, it's not gonna be an apples to apples, right? So I'm a real stickler for coding so that we have consistency. Also, the legislature uses a lot of our data to see where we're spending money and to make new rules. And so if they don't think we're spending enough or we're spending too much in one of these areas and we're not coding right, then we get stuck with a law because of incorrect data. Then I mentioned the object codes. So in payroll, that's going to include things like salaries, substitutes, benefits, overtime, anything that's associated with payroll. In contract services, keep in mind this is going to be audit, legal, tax appraisal, utilities, and recapture. So our biggest 6,200 cost is going to be the recapture, and behind that is going to be our utilities. Supplies is just what it is. Fuel, classroom supplies, paper, anything that is consumable. And 6,400s, this is travel and miscellaneous stuff. So the big costs here are going to be travel, webinars, advertising, food. And then debt payments, this is a little misleading these days. Debt payments used to be exclusively in the debt service fund for true bonded debt. But now because of GASB pronouncements, our equipment leases, copier rentals, those are considered leases or debt payments. And so now we're starting to see 6,500s in the general fund. And then anything that we buy that's over $5,000 in cost, like a server, a bus, a truck, that's a capital outlay item, and it has its own code. So in addition to functions and objects, we also have funds, which is how in governmental accounting we keep track of, is this a general fund, meaning it's state and local taxes? Is it a special revenue fund, meaning it's a federal grant or PTA donation? Where are the funds coming from? And then the program intent is how we track those special populations. So there's a program intent code for special ed, GT, bilingual, all of those things so that we can track those costs. And then organization. So we also know for each campus, for each department, what their budget and what their spending looks like. Okay, so before we break down our dollars, I thought it was important to show our student enrollment growth. So at the bottom, you can see the 5-year band percentages. So going back since 08-09, we've easily hit right at least 20% growth in our student enrollment. So what do you think that's going to do to our revenues and our expenditures? They're going to go up, right? Naturally. So here's a look at our revenue sources. And so you can see 19, from 19 to 20, so that's 2018, 19 to 19, 20. Things are kind of flat. There's a lot of things going on in those years. Those were COVID years. But you don't see our revenues really growing that much compared to student enrollment. And remember, student enrollment drives revenues. And then if you,
I'm sorry, is that revenue, if you go back to that, is that revenue post, recapture?
no, this is gross tax collections.
Okay.
And so the blue bar is our local resources, so that's gonna be tax collections, interest
I would
income.
love to see that with another bar or a portion of the blue being like lighter blue, how much we're sending out to actually see what we
So
can.
this is gross. So the orange, I kind of jumped through this, the orange is state program revenues. Okay, I said we get a little bit of state aid, but what you're seeing there is TRS, which is teacher retirement. So that's considered a state revenue. It matches the expenditure for TRS, so it's a wash, but we do have to classify that as a revenue. And so that orange is gonna grow as our staff numbers grow. And then you see a little bit of federal in the general fund. That's gonna be related to our special education services that we get some reimbursement for. And then on our federal grants, we can charge an indirect cost rate to offset our administration. And so our big federal dollars are not here, they're in special revenue funds. So I just showed last year because it's final, it's in the books. This year is still in progress. So just looking at the breakdown of our revenues, again, 87% of our total revenues are local, meaning tax collections, and again, this is gross, rent, interest income, 11% being state programs, so that's gonna be the little amount of available school fund money we get, and the TRS revenues. And then you can see a little bit from transfers in, and then federal program revenues. So the point to this is our district is really funded on local tax collections.
What falls under other? What's
So
non-
this other resources, so that would be, so like our lease, we just did a technology lease, the financing of that is considered other sources. And then we have the community services program with after-school care, and they pay us rent, and that comes in as a transfer. So switching to expenditures, blue being payroll, so by far, most of our costs are in payroll. Then you see the next biggest segment is contract services. This is excluding recapture, so I took this out, otherwise it skews the percentages. Then you see travel and miscellaneous, supplies is the next largest. Travel and miscellaneous, a small amount, debt leases, and capital outlay. So by far, all of our dollars are spent in payroll. So when it comes down to, if we wanted to balance our budget, the only way to do that is to really target your payroll cost, which means cutting positions. And that is not a fun process. So looking at it another way, the Pac-Man chart here again, last year's actual expenditures, payroll is by far the largest, and then contracted services is 7%. So remember, a portion of that is utilities, so that's not really negotiable. Supplies is your next area, and then travel, the leases. So again, if we were going to make major budget cuts, I've been in districts where I could cut all of these parts of the pie and still not get to where we need it to be. So then you have to start looking at payroll, and in a growing district, that becomes very challenging when you need to add teachers. And then this is the functional grouping. So this isn't all of the functions, but remember, this is the level the board approves at. And so instruction related, so this shows you that 56% of our budget really does go to the classroom. So in this grouping, let me get to my notes. What you see in instruction related, that's classroom, library, and professional or curriculum development. And then the next biggest piece is maintenance and the next biggest piece is recapture. So this one does show recapture, so that was 13% of last year's cost. And then the next biggest piece is maintenance and operations. So in this chart, this is facilities, so this is utilities and just the day-to-day maintenance of our facilities. It's a little bit of food service costs that we have in the general fund, and then it's our IT services. And then you can see the breakout. So instructional support here is our campus principals, our counselors, our nurses, and then Dr. Kidd's department that oversees and supports campuses. So that's where our money went last year. And then I always like to show our recapture history. So, we paid a little bit in 11, 12, and 12, 13, and then we were a gap district. We didn't pay recapture. And then 2016, 17 is when we went back into recapture at what was a substantial amount in those days at $2.7 million. That's when we went to the voters and asked for that management of the tax rate and lowered the debt service rate and increased the operations rate. And then you can see recapture hit 8 million in 18-19, and then there were a line right here. This is when House Bill 3 came into effect and did target recapture and did lower recapture for all districts. And then you can see since 21-22 and the massive rises in property values, recapture this year is expected to be between 23 and 24 million. Again, that's expected because it's based on our actual tax collections, which aren't final until after the fiscal year ends, and our student numbers. And then next year, not pending any legislative action, we're looking at nearly 27 million. And then statewide, I love this chart because, again, it shows we're back to historic recapture levels across the state. And that's what everyone was screaming about with House Bill 3, but it's just not getting any attention in this session. So our priorities for next school year's budget, in January, the board did approve building the budget with a 3% raise. We have received our TASB market survey, and we're ahead of most districts in certain bands as far as experience, and then right in line with market, and so 3% should keep us there. You might have been seeing information about Austin ISD and how much. Don't look at just the percentage because they're already so much lower that it takes them a 5+% just to catch up. So they're doing some things to get their pay rates up. We are building next year's budget on a 4.6% student growth factor, and we were estimating 33 new FTEs, and we're right around that number in what's been requested. And so what are our challenges going into next year? Pay increases for auxiliary staff. So you all know about transportation because that's the one that's gotten the headlines, but my cafeteria staff, we are really struggling in that area to find workers, especially when we have a bunch of new restaurants in our area that are paying 18 an hour plus. So how do we compete against that? Custodial, we have a lot of shortages. So I'm going to say in those three departments, we're at least 25% understaffed with vacancies. So that's a challenge. How do we attract employees when they can't afford to live out here? And I used to live in downtown Austin and commuted out here. I'm not gonna do it now because I would want to kill somebody every morning. So no one wants to drive out here for an hourly job. We don't know the legislature yet, so that's a challenge. Facility maintenance, so we have a lot of facility maintenance in the bond election for Saturday. If that is not successful, those problems don't go away. So this campus, we're moving forward with one of those projects regardless of the outcome of the bond because it just has to be done. So that is a challenge, as well as student growth, because student growth right now is being addressed through portables, and will have to be, because even if the bond is successful, we can't just build a school in a few months. It takes years. And so student growth continues to be a challenge on our budget. And then this year, our budget for next year will be adopted on June 26th. So let's switch gears a little bit, and, yes,
Just, so you're hoping to do the 3% raises, and like how much is that in the flux of if the bond doesn't pass and we don't have, you know, money to help support that? Or like, are we gonna be able to support that this year regardless? Or?
I think we almost have to, because what you find is if you don't keep up with what your neighbors are doing, then let's say we could not afford a raise this year and everyone else does 2 or 3%, then next year we're even further behind. And I'm talking teacher pay scales. And so we really have to pay attention to our immediate neighbors. Now, is a teacher gonna quit a job here to drive to Georgetown or Pflugerville? Probably not. Will they drive to Hayes? Yes. And so we have, if you don't do some kind of a raise, then you get further and further behind. So if bond isn't successful, then yes, it's a challenge because now we have these maintenance needs that are competing with the same dollars for salary increases.
It's like, can you give me an example of DSE right now, the plumbing that we just approved?
Right, so the board approved us moving forward with the plumbing not to exceed what was $275. So if the bond is successful, we'll pay for those repairs and then we'll reimburse the general fund. If it's not successful, then it's coming out of the general fund balance. So the more that we take out of fund balance takes us closer to that 4-month limit that we can't go below without the board changing that. So it is truly a balancing of the scales, right? Because I know for operations, I only have so much dollars. I can't generate more. The only way I can generate more dollars is to have more students. And we could open up, say, okay, we'll take any transfer because we want more students. Well, that's gonna backfire. Where am I gonna put them? And now I have to hire another teacher. So it's a balancing act, right? 10 minutes? Okay. All right, so this part's quick. So I just wanted to make sure everyone understands we have all of these state laws on how we do things. We don't just come in and go, oh, I think we're gonna adopt a budget this month. The state tells us our fiscal year, so I mentioned that, whether it's July or September, we're required to prepare a budget, we're required to keep records about those budgets. There are budget adoption requirements. TASB puts out a 5-page letter every year. It says you have to do this first, and then this first, and then this first. You have to adopt your budget before you adopt your tax rate. The tax rate is to be adopted that supports the budget that the board adopted. Well, now we don't have a lot of flexibility with our tax rate either, so it's at a moot point. But you do have to adopt your budget first. You have to publish certain things along with that budget adoption. You file your budget with TEA through that PEMS. We cannot spend dollars before a budget is adopted. I never thought I would face this in my life, but 2-3 years ago, the first approval of the budget failed. 4 no's, 3 yeses. And the board president asked me what happens, because it was late in June, it was the 26th or 27th. She says, well, what happens if we don't approve a budget? I said, I don't know, I've never been through this. I guess we shut down because I can't pay anybody starting July 1, so we're gonna have to figure this out. So we took another vote and it passed 4-3. But I was like, whew, I think we have a federal government issue here. I don't know how this works. Standardized accounting system. So I showed you parts of our accounting structure. We have what is called a FASRAG. I think I have it on another slide. The state tells us how to account for everything. So we have a manual, I call it our Bible. We are required to have an audit annually and file this audit with TEA. So state regulatory, again, a standardized system. The FASRAG tells us how to account for things, what has to be audited, and that is our official accounting rule for school districts. So it doesn't matter if you're in Amarillo or Houston or Pecos or Dallas, we're all following the same rules. Makes it really easy. I've been in 8 different school districts. Makes it really easy because I know the rules when I get there. And then federal grants, way too many to list here. Every grant has different rules, and they all have strings tied to them. Encumbrance accounting, so this is important. So, no, Miss Eubanks cannot just go out and buy anything that she wants for her campus. What we use is called an encumbrance system. So it requires requisitions and purchase orders. So if a employee wants to buy something, they are to get with their person in their department or campus, enter a requisition that goes through the accounting system and goes through multiple levels of approval. So we're looking for, is this a legitimate purchase? Surely you're not buying a margarita machine for your campus. Is it purchased from the right vendor? You can't just use any vendor. Is it coded correctly? Do you have sufficient budget for that? So there's a whole approval process before an order gets processed and approved. Furthermore, in our system, which is called Skyward, we have budgetary controls. So if a campus has $100 left in this area and they want to spend $500, they have to move money somewhere before they can do that. So I was married once. I would have hated to ask for permission to spend $20 more on groceries if I didn't have the money I needed, but that's what we deal with here. Everything has to be within the budget. And then campuses can submit transfers, but if they're moving between those functions, so if they're moving it from the library budget to the classroom budget, it has to go to the board for approval first because the board approves the budget at the function level. We have lots of state purchasing laws. So again, I said we can't just go to any vendor. So if it's an item that's over $50,000, this doesn't happen a lot with our campuses, but this is stuff like construction, buses, copiers. It has to go through a formal bid process. So we have to put that packet out, allow anybody to bid on it, then evaluate those bids, and then take the best option to the board for approval. If it's a purchase between $10,000 and $49,999, then we require multiple quotes before we approve that purchase. And then we require use of awarded vendors. What an awarded vendor is means we have bid that. So something as simple as t-shirts for a campus, if we bid that, you have to use a vendor that was awarded that bid. You can't use your brother-in-law because he has a company. We have to go through our awarded vendors. And then as I mentioned, all requisitions go through multiple levels of approval before they get submitted. On audit, so again, every year we do have to have an audit of our financial records by a certified public accountant or someone holding a permit to be able to do that. What the auditor is doing is looking at, do our financial statements fairly present the position of the district? So they're looking at many things, including our internal controls, journal entries that were booked, did we make our debt payments on time? They're looking at our investment activities, all of our transactions. So they're really saying, did Elaine record revenues that don't really exist? Did Elaine reverse expenditures that should be shown? Like, do our records accurately reflect what we are publishing, and do they show the district's real financial strength? And then our goal, this seems a little weird, but our goal is an unmodified opinion. And so that just means that the auditors don't have anything that they want to modify, but their opinion is unmodified on our financials. We also have what is called the first rating. This is the Financial Integrity Rating System of Texas. This started many, many, many years ago, and TEA had a separate solvency measure, and so they combined those. And so what this does is it takes the prior year's financial audit that was submitted to TEA, and it measures 20 different things. So there's 20 indicators, so they go through and they look at balance sheet accounts. 4 indicators are critical. That means if you fail one of those, you fail the rating altogether, no matter how perfect everything else is. And so those four critical things are, Did you file your audit with TEA on time? Many years ago, school districts let their auditors file their report and the auditor was a day late. Guess what? District failed. So that's very serious. Did you get an unmodified opinion? If you don't have an unmodified opinion, then you fail. Did you pay your debt on time? Remember, that keeps me up at night. I would fail the first. Did we pay our payroll liabilities? So did we make our TRS, our IRS payments on time? If you fail any of those, you fail your first rating. And your rating is just like your school report cards, A, B, C, F. And then there's 10 solvency indicators. Again, these look at balance sheet numbers, your assets to liabilities, and then your financial competence indicators. So are the projections that you're submitting to TEA as far as your student numbers, are they realistic? And so not only am I making these projections for my budget, I'm also having to submit those projections to TEA so they know how much money to fund us. Are our PEEM submissions right? So if our audit doesn't match our PEEM's numbers, then that's an issue. And then did we have material weaknesses, and did we get our postings? So there's a lot of things we have to post on our website, and that is measured in this first rating. There's also something that's called the Legislative Budget Board Efficiency Audit. This was introduced in 2019, and House Bill 3 required the Legislative Budget Board to establish the guidelines. So if a school district is going for a VATRE, they'd have to do one of these efficiency audits. VATRE, again, is where we're going and asking the taxpayers for more pennies on our tax rate. And what this efficiency audit does is it takes some peer districts based on student enrollment, student needs, financial resources, the labor market, and so usually your external auditor does this efficiency audit, and so they'll determine who your peer districts are, and then they break down as a comparison the district's revenues and expenditures to those peer districts, average salary numbers, fund balance levels, even teacher turnover, so is your turnover percentage higher than your peers? And then it looks at your processes for budgeting, your campus improvement plan, your district improvement plan. And so I've been through one of these efficiency audits. It's pretty simple. I don't know that it gave me a lot of good data. And so with that, I think we're right on time.